Welcome to the Crypto Prism channel. Today we're going to break down the latest price action on Bitcoin. If you've been trading in the past 10 days, whether you went long or short, you've probably been struggling because in these past 10 plus days, Bitcoin hasn't really gone up or down. It's just been chopping between $88,000 and $94,000, and every time price touches the upper or lower boundary, it only gives you a very short reaction window. Most people end up missing the best take profit timing, and within moments, the price snaps back to your entry level. For example, last night, Bitcoin dropped to $89,200. Many thought it broke the previous low, invalidated the bullish structure, and was about to break down further, but instead, BTC wicked the daily candle and bounced right back toward $93,000. This kind of choppy price action might actually be nearing its end. Why? Because even if Bitcoin doesn't move upward, simply going sideways from here means it will touch the trend line in about 4 days. That means once the weekend passes, Bitcoin may finally choose a clear direction. So in this kind of consolidation, how should we trade to gain an advantage? If Bitcoin breaks the trend line, should we consider chasing longs? If it breaks the lower boundary of the channel, should we chase shorts? Let's go through these questions step by step. From a technical perspective of our channel yet. Feel free to subscribe during a choppy market. One thing worth monitoring on CoinGlass is the BTC USD funding rate. Both Bybit and Binance funding data are useful. Just look at the weighted average if you want to short. And you see funding rates near zero or negative, that means the market is heavily leaning short. Short traders are paying funding to long traders. In this situation, Bitcoin often tends to move upward after the consolidation. On the other hand, when traders start piling into longs and the funding returns to normal positive levels, that's when you can start considering shorts. Of course, we don't rely on funding alone. You must combine it with the price action. If you're thinking about longing, check whether funding is still negative or very low. If it is, your long idea has better probability. But if funding has already climbed back to around 0.01 and the market is clearly leaning bullish, then the bears actually have the advantage because in a sideways market, high long interest equals shorting opportunity. High short interest equals longing opportunity. This is how you can use funding rates. Together with the candlestick structure on the daily time frame, Bitcoin is still following a clear downward curve. If price wants to break above the trend line, the level is around $96,000. A break above $96,000 would technically mean a trend line breakout, but in my view, I still wouldn't chase longs here. My overall outlook has not changed. This is still a consolidation within a larger downtrend. Even if we break the trend line, price might only push to $98,000, which for me is a shorting zone. A trend line breakout does not mean the entire trend is reversed. Let me show you a historical example. Here's a clear downtrend line when price broke above it. If you chase longs immediately, you would have noticed that the structure didn't actually change. It continued to chop and eventually broke down again. That's exactly what I want to remind everyone. History often rhymes, and current BTC price action is showing similar characteristics. So if you're thinking about longing after a trendline breakout, believing Bitcoin is heading straight back to $100,000 or even $110,000, then it's actually more advantageous to long earlier at the lower channel boundary. For example, around $89,000, or when price touches the trend line but doesn't break down. Why is that better? Because in a choppy market with no clear direction, if you wait for price to break above resistance and then chase longs, you often end up buying near the top of the range. Price then falls back inside the channel, and all your effort and margin are wasted. On the shorter time frames, we recently saw a classic top hunt on both sides. BTC made a false breakout, and during the second Fed rate cut, price still couldn't make a new high and continued dropping. Eventually, that move swept the previous long liquidity, took about 100 points. and then wicked back up with a strong reversal. If you're holding a trending mindset in this environment, it's extremely painful, so we must stay patient. Looking at the 4-hour chart, the main resistance zone is above us. This is where I'll be watching for potential short setups. If you ask whether a breakout here means bullish continuation, my answer is still the same. If you're considering longing from here, you might as well long from the lower levels with proper risk management instead. All right, that's all for today's analysis. Thanks for watching. And if you haven't followed the channel yet, make sure to subscribe. See you next time.